You know, we're back with more Money Power Politics tonight, and I want to start with a closer look at what President Trump actually hopes to accomplish with blanket tariffs. And just stay with me for a moment. He says that we need to keep tariffs in place to eliminate trade deficits and bring back manufacturing. Plus, all the revenue will be used to pay down the national debt and pay for the massive tax cuts. That is the theory, at least. But at the same time, the White House is currently bragging about how many countries are calling to negotiate. But if we start cutting deals and removing tariffs one by one, aren't they taking away the tools they claim that are going to eliminate the trade deficits and bring back manufacturing and raise revenue to pay for the tax cuts? Which one is it? And because we don't know the answer, nobody else does. And take a look at the futures markets. Nobody's feeling good. Jillian and David still here. So what is this? Is this a long-term overhaul of the American economy? Or is this a negotiating tactic because of those pesky, unfair trading practices, which there are some of?
Well, we were talking about the kind of panoply of views that are on display in the Oval Office, and I think that there are some who want that kind of radical rethinking of the way that the economy is structured, blow it all up, burn it all down, see what lives through all of that. And then there are those who have made the argument this is just sort of a mechanism by which we can stop the spread of the incursion of fentanyl, or we can stop immigration. So we've heard so many things. And I think what was so interesting about the testimony that we heard on Capitol Hill today was we had Jamieson Greer there, the U.S. Trade Representative, facing questions for the first time. And it was this moment when lawmakers got to ask that very fundamental question that you've raised, which is why is this happening? What's the rationale for it? And you and I have talked over these last few weeks just about how that's been an element that's been missing here. The president, when he announced these reciprocal tariffs, had the opportunity to give a speech in which he would explain to the American people why he was doing this in clear terms. He couldn't do it because I think that there are all of these kind of different reasons that he and others in the administration have. But you could see for the first time kind of a palpable level of frustration and anger, perhaps being transmitted by these lawmakers from their constituents back home, of that kind of wonderment that I think is taking place across this country. Getting back to what you said at the top of the show, why is this happening now? Why, when you sequenced this economic policy, was this the thing that the president felt like he had to start with, and it had to be so radical that we have seen day after day after day of precipitous drops in the stock market?
And if you're so focused on bringing tax revenue into this country, how about capital gains tax? You just wiped out $9 trillion in market value from the stock market. Remember, every time somebody sells a stock, they got to pay that capital gains tax to the country, to the government. Well, you lost a couple trillion in the last few weeks.
Well, I would agree with you on that. But, I mean, there is a confusion about whether the tariffs are supposed to be permanent or just a negotiating ploy. If they'd come out at the beginning and said, OK, we're going to have 5-10% tariffs to raise revenue, and then after that, the additional part will be a negotiating ploy, that kind of would have made sense. But like everything, it's confusion, and deliberate confusion, because President Trump believes that by keeping everyone else confused, he wins.
And he wants these planes in the air. I mean, he wants the leaders of South Korea and Japan. He wants the phones to be ringing off the hook so much as they are. I think that he wants to at least project that level of international desperation and eagerness to meet with him and broker whatever deal he's going to try to broker.
But when kiss the ring.
Yes.
But when people start to truly lose faith, they're not just selling stocks, they're selling bonds. U.S. Treasuries are where people flock. That's the flight to safety. That's the highest quality investment. And that's been the idea. That's where you put your money. And Scott Bessent has been the one arguing that, yes, you know, if we get a dip in the stock market, well, it'll, you know, we're going to lower rates. We're going to lower interest rates, and it's going to make it cheaper and easier when we have to refinance our debt. Well, now we're getting the perfect storm. Explain this.
Essentially, what we're having, while everyone's watching the equity markets yo-yo up and down, the bond markets are starting to yo-yo as well. And that matters because what happens to bond prices essentially sets what's happened to mortgages, what happens to companies' borrowing costs, what happens to national debt, interest payments, things like that. And the really big question right now people should be asking is why? Because in the last few equity market crashes, be that the crash of '87, be that the 2008 financial crisis, what you saw was that equity markets crashed, and bond prices usually rise and essentially yields fall as a result. And so if you're losing money on your equity part of your portfolio, if you have a 401k, at least you're still winning on the bond park. What we're seeing right now is that both markets are crashing, and that's really bad for ordinary investors with their portfolios. And as for why it's happening, that's a really big question, because yes, it might be because people are scared of inflation. It might be because people are running away from American assets. It might be because someone like China is saying they don't want to buy anymore. However, there's a much more immediate issue right now that people haven't been talking about, which is the hedge funds. Because there's something called the basis trade, which hedge funds have been making. It's a complicated financial strategy. And research suggests that, in fact, hedge fund buying has been more important than dealer buying in many of the recent auctions. And it looks as if that basis trade is starting to unwind. And it's a bit like a game of Jenga, where you've been putting in more and more blocks, getting higher and higher as hedge funds have piled on more and more bets. And if you take out one or two of the blocks down the bottom,
the whole thing tumbles. I know we have to go, but the other point about foreign countries, about others pulling their money out, this could be the end of American exceptionalism. When all these countries are watching this disaster play out and we're insulting them, they could take their toys, they could take their money and say, I'm not investing in your stocks, I'm not investing in your bonds, I'm done with you, America. What does that look like for us?
We have seen this reorientation of the global economy, and you just look at the messaging that we're hearing from Ursula von der Leyen from the European Commission, for instance, her eagerness to meet with China and look for kind of new alliances in the wake of all of this. I think we're seeing this kind of fundamental reshaping of geopolitics broadly, the economy in specific, and I think that's going to be a lesson here going forward.